Uh, I am Assistant Professor Praveen Savi. Today we will cover the topic residential status and scope of total income for individuals. When we say residential status, it means stay in India. The stay may be at one place or maybe at different places. Similarly, the stay may be continuously throughout the period or maybe broken into periods. A person may live for 1 month at one place, another month at another place, etc. Similarly, for 1 month he can live in India, 1 month he can live in abroad. So the residential status of an individual determines whether the person is a resident of India or non-resident. For a person to become a resident of India, he should fulfill the following conditions. There are two conditions. He can fulfill any of the two conditions. First condition, stay of 182 days or more in the previous year. A person can become a resident of India by fulfilling this condition. It means he has to stay at least 182 days in India to become a resident of India. Again, the stay need not be continuous. The stay need not be at one place. The stay includes the territorial waters of the stay includes the residential territorial waters of India also. Thus, when a person fulfills this condition of 182 days, he is said to be resident of India. But for some reason, if the person is unable to fulfill the condition of 182 days, the provision of law has been made by which, even if it is for less than 182 days, he has an scope to become a resident of India. That is, he has to fulfill the second condition. The second condition is stay of 60 days or more in the previous year and 365 days or more in the preceding 4 years. When a person fulfills this condition, that is, his stay in India in the previous year should be minimum 60 days. If he is fulfilling this condition but not the condition of 182 days, he can still become a resident of India by having 365 days in the preceding 4 years. Thus, the person who fulfills either of these conditions, that is, stay of 182 days or more in the previous year or 60 days or more in the preceding 4 years, is said to be resident of India. This rule is exceptional to certain cases. There is exceptions like if a person is going abroad for employment purpose or if he is a member of a crew. In that cases, uh, the condition is different. Again, if a person of Indian origin is coming on visit for India, the conditions are different. The exception to this rule, that is for residential status of individuals, the exception are as follows. If a member if a person is a member of crew or is going out abroad for employment purpose, or if a person of Indian origin is visiting India, that is, he comes on a visit to India, for them the condition of 60 days is not applicable. For them to be a citizen of India, they should have at least 120 days and 365 days in the preceding 4 years. Thus, this is the basic condition for a person to become a resident of India. If these conditions are fulfilled, he will be the person, the assessee will be treated as resident of India. But if these conditions are not fulfilled, the person will be said to be non-resident. Once the person is classified as resident, further two additional conditions are required for him to become ordinary resident. Thus, a person, for him to become ordinary resident, he should fulfill both the additional conditions. The additional conditions reads as first, his residential status in last 10 years should be that he should be a 2 years resident in the last 10 years. Second condition is his stay in India should be 730 days or more in the preceding 7 years. If he fulfills both these additional conditions, he will be treated as resident and ordinary resident. But if he fulfills only one condition or none of the conditions are fulfilled, in that case he will be treated as resident but not ordinary resident. Thus, an individual is classified as resident and ordinary resident, resident but not ordinary resident, and non-resident. For counting days for the purpose of residential status of 182 days, 60 days, 365 days, or 730 days, as the case may be. For this purpose, the day the person is going abroad, even that day is counted. The day the person is coming in India, that day is counted. So the person gets benefit of both the days. While departure, his going abroad day is also counted. For visiting back or coming back, his day of coming is also counted. So the days are counted from the date of arrival of and from the date of departure, as the case may be. Once a person's residential status has been determined, thereafter the next step is to determine his scope of income. Based on the residential status of the income, his scope of income will be decided. That is, person who is having resident and ordinary resident status, his income scope is different. Person with resident but not ordinary resident, his scope is different. Person with non-resident status, his scope is different. Now, regarding scope of income, the in short, we can see whatever income is deemed to be received in India, either it is received in India, it is accrued or arised in India, or deemed to be received in India, or deemed to accrue in India. This all will be included in the hands of all the status, that is, in all categories, whether the person is resident and ordinary resident, resident but not ordinary resident, or non-resident. But suppose a person is having income which is classified as foreign income. In that case, foreign income received in foreign country, or from a business controlled from India, or a profession set up from India. In that case, the income will be included under resident and ordinary resident, as well as resident but not ordinary resident. It will not be included in the non-resident status. Similarly, foreign income received in foreign country from a business controlled from outside India or profession set up outside India. In these cases, the income will be included only in the hands of resident and ordinary resident. It will not be included in the hands of resident but not ordinary resident and non-resident. Income received in India includes all incomes, whether they are received in India for any services provided in India or outside India. Similarly, income deemed to be received in India refers to all income which has been generated in India. It might be received abroad. Such incomes are said to be income deemed to be received in India. So all this will be included in the hands of all the three categories, that is resident and ordinary resident, resident but not ordinary resident, and non-resident. This is the summary of the residential status. A resident taxpayer is an individual who satisfies all these conditions. As explained, resident in India for a minimum of 182 days in a year. Now, year for this purpose is considered from 1st April onwards up to 31st March every year. A person can fulfill this condition, but for some reason, if he is unable to fulfill this condition, the second condition is there. Resident in India for a minimum of 365 days in the immediately preceding 4 years and minimum of 60 days in the current financial year, or we can say current previous year. example is given: a person is resident or having a business of a location, visits different places for his purpose. Example: now consider Mr. D, who is a business head for Asia Pacific regions for a private firm. Now D was born and brought up in India. He has to travel to various locations of the continent for business purpose. For this purpose, he has spent 200 days traveling in the current financial year. Also, he has been traveling abroad from the past 2 years and has stayed out of India for about 400 days in this period. Now, Mr. B does not fulfill 182 days condition. His first condition of 182 days is not been satisfied. But out of 365 days in the year, he is out for 200 days. That means he is in India for 165 days. He can fulfill the second condition, that is of 60 days in the previous year and 365 days in preceding 4 years. Now it is given in the question that he stayed for 400 days in last 2 years. So out of the 4 years, preceding 4 years, 400 days he is out. So remaining days he is there. So each year 365 days. So 365 days into 4 years. So that is around 1061 days he stayed in India. So he is fulfilling the second condition, that is 60 days in the previous year and more than 365 days in preceding 4 years. Hence, D satisfies the second condition and we can say that he is a resident of India. Further additional conditions for Mr. D to become a resident, an ordinary resident, that is, he should be resident in India for at least 2 years in last 10 years and his stay in India should be 730 days or more in last 7 years, that is preceding 7 years. Now from the given information we can find out whether he is a resident or ordinary resident and or resident but not ordinary resident. Now Mr. D was traveling in last 2 years, so he can have we can say that in the previous 10 years, 2 years he is not there and remaining 8 years he is resident in India. Thus he fulfills the first condition of 2 years residence. Again, in last 8 years he is occupying the residentship of India. He is there in India. It means he will be there for at least 730 days. It means he is there residing in India for more than 730 days. He fulfills the second condition also. Thus both the additional conditions have been fulfilled. 2 years resident in last 10 years and stay of 730 days or more in last 7 years. Both these additional conditions are fulfilled. Hence, we can say that Mr. D fulfills both the conditions, regular condition as well as additional conditions. Hence, he will be classified as resident and ordinary resident. Let's consider another example. Now, in this case, G went to London to join a reputed university for a graduation course of 3 years. While studying there, her professor suggested her to join a postgraduate course at the same university of 2 years. She had to get an internship certificate to complete the course. Upon completion, the firm offered her a permanent position. She has been an employee there for past 4 years. That is, Mrs. G has stayed out of India for 9 years now. She receives rental income from the property that she inherited from her parents. Now, in this case, both the basic conditions are not satisfied. That is, stay of 182 days and 60 days and 365 days. As she has been out of India for several years. And since both these conditions are not satisfied, she will be treated as non resident. The exceptions to this rule: a person is a citizen of India and leaves India for the purpose of employment during the financial year, or is a member of a crew, or a person of Indian origin who is staying outside India, that is a citizen of India or a person of Indian origin, comes on a visit to India during the year. For them, the condition of 60 days will not be applicable. Next part is the scope of income. Now, scope of income is classified on the basis of resident and ordinary resident, resident but not ordinary resident, and non-resident persons. Now, first point in it is income received or deemed to be received in India, whether it is earned in India or elsewhere. If income is classified under this head, that is, the income is actually received in India or it is deemed to be received in India, in such case it will be included under all the three heads, that is resident and ordinary resident, as well as resident but not ordinary resident and non-resident. The second case, income which accrues or arises or is deemed to accrue or arise in India during the previous year, whether received in India or elsewhere. That is, income is generated in India, or it is accrued in India, it has arisen in India, or it is deemed to accrue in India, or it is deemed to arise in India. Such income, again, whether it is received in India or received elsewhere, it will be included under all the three heads, that is resident and ordinary resident, resident but not ordinary resident, and non-resident. Next, third point under this scope of income: income which accrues or arises outside India and received outside India from a business controlled from India or a profession set up in India. It means income is received in foreign country from a business controlled from India or profession set up from India. In such cases, the income will be included under two heads, that is resident and ordinary resident, and resident but not ordinary resident, but it will not be included under the head non-resident. Next, fourth case under the scope of income, that is income which accrues or arises outside India and received outside India in the previous year from any other source, that is foreign income received in foreign country from a business uh, controlled from outside India or a profession set up outside India. In such cases, the income will be included under the head resident and ordinary resident only. It will not be included under the head resident but not ordinary resident, and also it will not be included under non-resident. Apart from that, there might be income which is accrued or arised outside India and received outside India during the preceding previous years, and it is remitted to India during the previous year. That is, to sum up, we can see past untaxed profits brought to India during the previous year. Now, these past untaxed profits, since it is not related to the current previous year, it will not be included in the under the any of the heads. It will neither be included in resident and ordinary resident, resident but not ordinary resident, nor it will be included in non-resident. Let's take an example regarding scope of income, some based on scope of income. Here in this question, Mr. Tom, a British citizen, provides you the details regarding his income during the year ended 31st March 2022. He has derived several incomes. First, income from house property in India, rupees 15,000. Second, income from property in Rome, 10,000. Third, income from bank account in India 1200. Fourth, income from business in Bangladesh been controlled from India 16,000. Fifth, interest on bank account in USA 11,000. Sixth, salary earned and received in Tokyo 12,000. Seventh, income earned and received in London 13,000. Next, dividend from British company received in India 17,000. So these 8 points are the questions which from which we have to determine his residence scope. That is, we have to segregate or classify the income, uh, whether it will be for ordinary resident, not ordinary resident, or non-resident. Let's check with the solution. Now, first point was income from house property in India. Now, it is since the income has arose in India, it will be applicable or included under all the three heads: ordinary resident, not ordinary resident, and non-resident. Thus, the amount 15,000 will be included in all three columns. Second point, income from property in Rome. Now, Rome is outside India, so it will be treated as foreign income. Now, regarding this income, it will be considered as foreign income received in foreign country from business controlled from outside India or profession set up outside India. There is no direct connection of India in the income. Hence, it will be included only in the first column, that is ordinary resident, and it will not be included in not ordinary resident and non-resident. Hence, the amount 10,000 is written only in first column. Third point, income from bank account in India. Now, the income is from the bank accounts in India. That is, it is said income is assumed to be arising in India. Since it is arising in India, it will be included under all the three heads. That is ordinary resident, not ordinary resident, and non-resident. Hence, the amount 1200 will be included under all the three columns. Next, fourth point, income from business in Bangladesh been controlled from India. Now, this is a case in which foreign income is there. Bangladesh being a separate country, so the income will be considered as foreign income. But since the business has been controlled from India, it will be included in the first two columns, that is resident and ordinary resident, and resident but not ordinary resident. However, it will not be included under the head non-resident. The reason is it is controlled from India. Next, fifth point, interest on bank account in USA. Now, this income is assumed to be treated as received in USA. So, it is foreign income received in foreign country. Now, regarding business profession controlled from India or set up in India, it cannot be applicable as the income is purely from foreign country. Bank account is situated in USA. Hence, this income will not be included in the last two columns, but it will be included in the first column, that is ordinary resident. Hence, 11,000 will be shown only in the first column and not in remaining columns. Next, sixth point, salary earned and received in Tokyo. Now, Tokyo is again a separate country. It is income which is considered to be received in foreign country. Hence, it is foreign income. So, we can say it is foreign income received in foreign country from business controlled from outside India or profession set up outside India. For this reason, it will not be included in the next two columns, but it will be included only in the first column. That is, it will be included under the column ordinary resident, but not under the not ordinary resident and non-resident. Hence, 12,000 will be included only in the first column. Next, seventh point, income earned and received in London. Again, London is a separate country. London is a separate country, so the income received in London, earned in London, will be considered as foreign income. So the case will be foreign income received in foreign country from business profession, business controlled from outside India or profession set up outside India. Hence, it will not be included under the last two columns, but will be included under the first column, that is ordinary resident. But will not be included under not ordinary resident and non-resident. So the income amount of rupees 13,000 will be included only in the under the first column. Next point, point number 8, dividend from British company received in India. Now, since it is received in India, it is will be applicable in all the three columns. The income will be recorded in all the three columns. Hence, 17,000 income will be recorded in ordinary resident. Uh, it will also be recorded in not ordinary resident, and it will also be recorded in non-resident. Now, the question read was 8 points. So 8 points have been completed. Thereafter, that total will come under each head. So ordinary resident 15,000 plus 10,000 plus 1,200 plus 16,000 plus 12,000 plus 13,000 plus 17,000. That total will come 95,200. In case of resident but not ordinary resident, the income will be counted as 15,000 plus 1,200 plus 16,000 plus 17,000. That will give you 49,200. In case of non-resident, the income will be 15,000 plus 1,200 plus 17,000. That will give you 33,200. Hence, finally, the total income or the scope of income included under the resident but an ordinary resident will be 95,200. Resident but not ordinary resident will be 49,200, and for non-resident it will be 33,200. Thus, to conclude, we can say that today we learnt with the residential scope of residential status of individuals and scope of income of that individuals. Broadly speaking, we can say the residential status of individual is classified in three parts. First, resident and ordinary resident. Second, resident but not ordinary resident. And third, non-resident. It all depends upon the state of India and the days of calculations for that. Second part we learned with the scope of income. Now, it is based on the residential status of the person. So different residential status will have different income. Now for both this we have seen the examples. That's all. Thank you.